coming. So earlier we are starting the second day of World Blockchain Summit. We are welcoming on stage our esteemed speakers. And it's an honor for me to moderate this panel. And we are starting from the introduction of ourselves. So about myself, I'm a partner of NewTribe Capital. We are one of the earliest Web3 funds who started here in the UAE. We've been here for 4 years, invested in around 200 startups all across Web3 space. Chain agnostic, still keep being active within the MENA region. So going ahead with our panelists, could you please introduce yourself, something about your background, and the entity you represent?
So my name is Florian Rais. I'm founder and CEO of Criptonite Asset Management. We are part of the Wave Digital Assets group. We have 2 companies. One is in the US, we're SEC regulated, and in Switzerland, we're FINMA regulated. We are generally asset managers. We don't do anything else. We don't have hardwares or infrastructures, and we manage treasuries for protocols mainly and for other large crypto holders. We came from a traditional industry background, and we do venture funds for protocols as well. We are also taking part of the liquidations of seizures and bankrupt assets, such as the FTX or Celsius or the others. And we believed from the beginning that traditional asset management functions would be adamant if crypto and digital assets would have become a genuine asset class.
Thank you.
Great. My name is Amit Grover. So I run an intellectual property advisory practice in 6 countries that I've been doing for about 16 years, all about building IP, monetizing IP. I'm also a venture capitalist, mainly in the role of a limited partner and a general partner in multiple funds across the world, from Singapore to Luxembourg, right down to the Middle East. And the areas that I have an interest in is impact and ESG, and exploring how blockchain and AI and decentralized finance could be a part of achieving impact mandates in several industries that we take an interest in.
I'm Dinah Biggs. I'm a partner at 1KX. We are an early stage venture firm focused on crypto, probably one of the first token funds in the space, and investing across the board from infrastructure to decentralized digital media, and gaming and DeFi and NFT-Fi. And our focus is really on the use of crypto economic incentives for powering and sustaining open source software.
Hi everyone, I'm Julien Thevenard, and I'm part of the investment team at Fabric Ventures. Been doing that since 2018, and Fabric Ventures is a VC fund focusing exclusively on the crypto space, investing at the seed stage, and we've backed around 100 projects since 2017.
Thanks a lot for introducing yourself. It's great to see that we have panelists who are covering that free space from different angles, doing different things within the space. And we are here to talk about the future of digital assets. But before talking about the future, I would love us to have a general overview of how the industry is evolving. So, for example, we are now in 2024, and I believe we've all been here for a long while already, and it would be good to understand your insights, like, how the industry is evolving, what's the changes we can see compared to the last year or even to the last cycle.
Well, if I may, one thing that is very clear is we are seeing a surge of regulatory talks, and that's, I think, that's a very big change, which in our opinion it's very good, it's very positive, it's very necessary, because at the end of the day, for an industry not to see and to be marginalized, you need to be included into the traditional asset management space, because at the end of the day, if crypto, as we believe it is, has a space in there, you have to meet the codes of the traditional asset management, both in ventures and both in asset management and in any kind of form of shape. You need to adapt your code to them. And one thing is, regulations is adamant. We hope that smart regulations will prevail. It is true that you can see they have different trends. The SEC is taking a certain approach. MiCA, Switzerland, UAE is trying to look at things differently. We will see. It will evolve. It's an electoral, it's an election year in the US. So a lot of things can change. We will see how it is. But that basically, I would say the main point is including regulations has been changing the landscape, and it is very welcome in our opinion.
Okay, thank you.
I think one of the interesting things that I'm seeing in this space is early stages of maturity of the space, especially if you look at tokens and how the tokenization has moved from purely possession-based things like art and other utilities to really entering the real-life asset space where people are talking about intellectual property, the field that I'm heavily involved in, or real estate. So I think, building from the regulatory point, the regulation is paving the way for some of these digital assets to get more matured in terms of their used cases, as well as, integrate real-life assets and make way for traditional investors and a much larger pool of investors that have been conservative till now to enter the digital asset space. And that's something that we're going to see advance in 2024 and pave the way forward.
Yeah, so this year, 2024, marks 10 years since I personally moved into the space full-time. And looking back, there's some things that you think, actually, that's been incredibly slow. And then when you actually dig deep into the various pockets of innovation that are happening across the space, there has been such incredible progress, actually, when we look at the complexity of the technologies or certain areas like ZK technology, for example, zero knowledge. When we look at fully on-chain gaming, the developments that are happening at the builder level and at the core technology level are incredibly impressive. And so it's been fantastic to look at builders and do that. Also, even 5 years ago, if you were to say, as someone working in a financial institution, I know this from leading innovation inside one of the world's largest banks, this was sort of a topic, crypto digital assets, that you couldn't really bring up internally, and you were never really sure, am I risking kind of my career path if I say that this is the area that I want to focus on? And that was always quite a large question mark that was looming over anyone who was interested in the space. And today we have crossed that barrier as well. We have the world's largest asset manager, BlackRock, that has a Bitcoin ETF that really wasn't something that we could even have imagined a couple of years ago. So now there's no longer that kind of overhang, that looming question of, is this something that is going to be a reality? It really is, and so teams are able to invest in the talent that they need and to be able to move forward in what they're developing, and that's sort of at the institutional level, and then certainly at the builder level, and actually what is actually possible with this technology. We're seeing those developments happen, as well as new innovations and capabilities come into the space, looking around scalability, et cetera. So this is really quite a breaking point and a really exciting time to be building.
Yeah, and I feel like every cycle, we look back on the last cycle and we say, the infrastructure was really basic last time and we're finally improving, which is true. Every new cycle, the infrastructure does improve. And I think we're finally reaching a point where, you have cheap layer 2s with actually transaction fee of a fraction of a cent, which make this technology finally usable for most people on Earth, as opposed to before, like $10 transaction fee to move money around. It's still a lot. And so thanks to that, I do think we're finally going to see more adoption of this technology worldwide, whether it's like stablecoin for payment and removing transaction fee or currency conversion fee across the world. Very excited about that. Or just generally everyday people finally being able to use this tech to earn yield or whatever in the DeFi space. To me, that's actually quite interesting, and we're finally seeing this possible. So that's what I'm excited for.
So interesting, we're all talking about regulations. We are all talking about tokenization and that the infrastructure is becoming more mature. And I would love you to elaborate a bit on how technology, Web3 technology specifically, is serving for the government? Maybe some practical use cases or the role of the technology in terms of financial inclusion in some developing countries. So how do you see this kind of intersection between Web 2 and Web 3? How do you see this collaboration between institutions and people who are here to innovate the space?
Well, there is one thing that always strikes me. We speak with banks and asset managers most of the time, and a lot of conversations that we have, first of all, we realize also that the knowledge level about crypto is extremely low. It depends where you're talking about, but in general, for banks and asset management, the understanding is extremely low, which comes always to the question, there is no use case. Then I say, well, okay, give me one, I give you one example. We manage treasuries for protocols, and one of our very important clients is IOG, the developer of Cardano, and his founder, Charles Hoskinson, which has been very prominent with us. He built with his own money a blockchain that would go to Ethiopia to actually solve one very important issue, is the students go to university, get a degree, and the biggest problem they face after graduating from university is to prove that their diploma is real. That it is a big struggle. It shouldn't be. So basically build an infrastructure with an NFT attached to it that a student can just flag his code, NFT, triangulations, and then everybody understands this is a genuine certificate, and we can talk about how good he is and what are his ideas. This is a very life-changing project, and this is thanks to blockchain, NFT, and crypto in general. This is a very real-life use case, and there are tons of those, but they are not being explained. And this is why the asset management, the world of finance, let's put it this way, I lived the same thing when internet was and .com was. I was the head of investment desk at a bank in London, a Swiss bank in London. It was the same thing. People were coming with their ideas about, .com here, .com there, and people will look at this and say, my goodness, it's all nonsense. And well, some was, sure, but Madoff was not in .com, and it was nonsense. But so basically, you have nonsense everywhere. That's fine. It's part of the game. But let's not make, a few examples. But let's explain and show what are the use cases in order to understand this much better. I think this is the key. Understand, show, explain the use cases. Because, and then I stop. But internet was also a nonsense for many until two use cases appeared: emails and web browsers. Companies had the possibility of having a web page suddenly say, this is what it is, right? And look what has happened. We can't live without it now. So.
Yeah, I'd like to take a step back from the digital asset into the entire infrastructure that it works on, like blockchain, and talk a bit about blockchain that's been around longer than crypto's been around, to be honest. It just became a household name because of crypto and NFTs a few years back. Financial inclusion, I have never seen a platform or a technology drive financial inclusion, especially in some emerging markets like blockchain has. I mean, point in case, let's take a point of India, right? That's literally paving the way and setting the standards for what fintech innovation really is. The level of digitization, you've got a large population that doesn't even have bank accounts, where access to banking and banking transactions is a barrier. That's where mobile payments solve the entire bandwagon of financially including large volumes of population in a massive, diverse ecosystem into that entire consolidated payment solution. So Absolutely, when it's financial inclusion with empowering women in Africa, mobile payments and digital payments are empowering women to have access to financial freedom that they've never had before, where they would historically and traditionally depend on the man in the family to be able to do that. Like I said, in many markets, Indonesia, Cambodia, central banks are adopting digital payment solutions, pretty much working on blockchain to solve that issue rather than the traditional method of opening a bank account the historic way, doing the KYC the historic way. So the way I'm seeing that blockchain, in my humble opinion, has driven financial inclusion at a speed, at a rate, at a scale that I've never seen in my career. So absolutely, financial inclusion is something that's come out of this.
Financial inclusion is actually the use case that got me into the space. In 2012, between 2008 and 2012, was focused quite a bit in financial services in sub-Saharan Africa, and then in 2012, setting up microfinance programs in Burkina Faso and Sierra Leone. And then in 2013, we had an e-commerce business running out of Nairobi. And so for the retail use case in West Africa, and then looking at a commercial use case in East Africa, there was a lot of complexities and issues and challenges in using the banking system there, both for the microfinance institutions, for the entrepreneurs, of course, and individuals who are looking for access to financial services, and then even as a global company trying to operate with trade between North America and the continent. And this has to do with a number of reasons. It's not just infrastructure, it's also business decisions for some of the global intermediaries in the financial services industry. So this has been a really exciting potential use case for about 10 years, and we saw in that wave between sort of 2014, 15, a lot of startups, of projects in different geographies who are looking at remittance use cases, looking at payments use cases. And we've gone through these waves, but what's really exciting is that we are getting there now. A lot of the challenges that comes with where the potential in this can really be unlocked really depends on local market knowledge and the on and off ramps and understanding the needs of very specific local populations, and that's happening now. And then also the technology itself being ready. So having blockchain systems that are able to process those transactions when needed and to be actually the low-cost promise of this efficiency and global interoperability that is really going to drive that the benefits to the users at the end of the day. So it's been quite early the last few years to really test these very emerging technologies on, for instance, marginalized populations. That has had mixed results, but now we're seeing initiatives like Circle, for example, has done various projects in terms of cash payment transfers with the UN. We're seeing a lot of local level initiatives as well, and certainly for projects like Uphold, an exchange that allows you to hold your money in different fiat currencies from around the world, they're seeing a really influx of users from geographies, Argentina, Malaysia, areas where people are looking to transact in fiat currencies or with different regions that they might not have that access and those rails in the traditional banking system. Also behind it, having the transparency that is enabled through these systems, and that therefore enables you to, with the understanding of the on and off ramps and of the partners and of the regulators, to really capture the fact that this enables the transparency. And so some of those business rules that are around sort of preconceived notions, or because of they did not have that level of transparency, there was the opaqueness in who is receiving and sending certain transfers. So ideally, with the fundamental benefits that this provides with the openness, we can actually see an opening of rails that just previously weren't possible.
Yeah, and I guess, thinking from first principles, I think it's as simple as, this tech is being adopted where it is actually superior to the traditional alternative. So for example, this morning I was reading about the Venezuelan state oil company that's trading more and more its oil for USDT interesting use case for stablecoins. Or generally, some people might find that speculating on chain or on tokens is much more interesting than trading stocks. Fine, a good use case for some people. Maybe some think it's not that interesting, but such is life. And when we look at the traditional finance, their incentives is not really that much to adopt this technology fast. I mean, why kill the golden goose? They have so much fees on so many of the things that this technology could disrupt. So probably best to take it slow from their side. And I don't really see the change coming from there. I see it more coming from entrepreneurs finding some very specific use case to really invade this industry and take it. So let's see. So for me, when I'm looking at like real-world assets side of things, I'm always a bit skeptical of where that chain is going to come from, because investors that can invest in this space, they can do this from elsewhere. They don't really need blockchain today. So look, ultimately, this is where, like from my perspective, I always look at what's the fundamental need for the end user of this tech, and is it going to happen now? And this is why, again, I really like everything that just touches payment and stablecoins right there, because just looking at the numbers, it's so obvious that it's solving a pain point that the traditional finance does not care too much about solving or improving. So that's where I focus my attention right now. And we see more and more companies helping commerce across Asia, cross-country payments that are super interesting. Also between Asia and Africa, we invested in a company called Yellow Card. Things like this, to me, super interesting, and I think something to watch for.
Well, if I may, Riban, I really agree on what Julien just said. But you mentioned, about the usage of crypto being always seen as, it's a disruption. It's something that is going to challenge the establishment, the banks, and then everybody is super scared about this. And of course, the traditional banks are fighting it, because when, if you're scared of something, you're going to fight it. And what Amit said about, the use case of payment remittance and all this, it goes back to education for this asset class. Nobody understands it in the traditional world, because you have the group of traditional players. They see, oh my God, my job is at risk because the banks are going to lose this and that, so therefore I'm going to fight it off. And then you have the others that are in need, are being ignored. So perhaps we strongly believe that the way to do this is actually to explain to the first group that, listen, cryptocurrencies, even as a mean of payment, is not there to disrupt dollars or euro or Swiss francs or pounds. This is not the target. There are 80% of individuals on this planet, they do not have access to banks. They don't have something that they can make business with their neighbor. You have entire continents. They have neighboring countries. They're not even able to trade with one another, even though they can see them from across the border. How irrelevant is this? So instead, and this is what is really kind of appalling in a sense, is instead of looking at the map and saying, okay, let's bring innovations in a very intelligent way, we spend, or traditional banking world is spending so much time, energy, and money to try to fight it and say, oh, no, because I want to keep my margin. There's a little bit of silliness into this. And I think, again, education, I believe, will make it work, will help this pass the line.
Yeah, correct. And so it's basically, Florian, like to also elaborate on what you're saying. So we looked at the technology from regulatory perspective, from government perspective, from institutional perspective, and as you mentioned, like the history is basically like kind of repeating itself, right? So there was Web 2 boom, and now we are evolving, we are evolutionizing. Now we are like here at the beginning of kind of Web 3 revolution, right? And we just highlighted one of the practical use case of technologies. It's of course is financial inclusion, the payment transactions, but at the same time we all talking about mass adoption. What I remember, for the last at least 3 years, people are talking, we all need to have mass adoption. We all need to have read retail to come into the space? Because unfortunately, as you mentioned, right? So we still kind of, staying aside. People are afraid to use Web3 technology, right? So how do you see the trend? What are these kind of, key pillar for the mass adoption? What kind of technology we could use to bring more retail into the space?
Have you looked at it in the sense that this is the first time in financial history that there is an asset class that came from retail. In every time in history, a new asset class comes from institutions. They invent, they use, and when they have actually made a lot of profits and money and usage out of this, they just kind of dump it into the retail and say, now you can play with it. Internet stock was exactly this, right? So crypto has changed the codes. That's why it's so uncomfortable for institutions, in my opinion, to accept it. But and that's why we have but the mass adoption, and it's Web3. There are 3 billion gamers on the planet, according to figures that are circulated. 3 billion. So it means that for a gamer, what is important? You don't need to explain to him what is the value of a digital asset, because he knows it. Every day he uses it. There is no question asked. No, it's mine. It's my avatar, it's my things, it's my this in my game, right? So mass adoption will come naturally because this generation will completely understand that there is a logic to own a digital asset. Would that be Bitcoin or something else? But this is a normal path, in my opinion.
I would agree with that, actually, because the trend of this industry, to me, is pretty impressive, how it's grown basically on its own, and no one is really pushing marketing crypto as a whole. It's very small exercise left and right. And every cycle, there's more and more people that come in the space, and for sure next cycle, it's going to be the same. I think it's down to more and more interesting application, broader and broader applications. Gaming is a good example. Okay, regulation should not kill it. I mean, if you look back at the web itself, the US nearly tried to ban encryption and could have literally killed the internet, and it would have been a disaster for humanity, I think, given how influential the web is for us. So hopefully nothing like that happens for Web3, the evolution of the web. But yeah, I just think it's just, we have to set real expectations right. This industry is not going to change the world overnight. But if you look back over the last 10 years, it's actually pretty impressive the number of people that know about it, have used it, despite the pretty crappy user experience still overall.
I think, as far as I'm concerned, the mass adoption, the wave has already started. I mean, if you're looking at the CBDCs, there's barely a country to talk about today that's either not working on a white paper or working on the logistics of how do they achieve a digital footprint with currencies in their own local ecosystem, and of course, cross-border ecosystem. Also, in terms of mass adoption, what one has to understand is a lot of, especially in the business community, a lot of the usage of digital assets is based on the concept of trust. Whilst it's amazing to talk about the fundamental of decentralization, but money works on the concept of trust, and by securitizing some of these assets, like I said in my opening statements, a lot of tokens are moving with real life use cases, and a lot of regulation, to my colleague's point, is coming on, gives and builds that faith from trusted bodies to be able to, penetrate the traditional asset classes and traditional investors with their capital to see a lot of merit in the digital asset world. So the way I'm seeing it, mass adoption is already happening. People are working towards it, both from a private sector perspective as well as the government perspective.
Well, I mean, to bounce on this very important point, I mean, the CBDC, I mean, every government, developed G7 government, they already have digital currencies. I mean, they're long gone printing papers and distributing money. Even when they do parachute money, it's just for, it's a concept. So everything is digital money anyway. So in this sense, there is a blanket that is going to be applied, or we're going to, I don't know exactly what the mindset of the central bankers are probably to cover up the mass creation of money into something rather new and giving the feeling that they are more in control because it's CBDC. But let's face it, this is already having an uncontrolled printing of money digitally.
No, but talking about CBDC, for example, CBDC is a part of digital strategy on the UAE website, for example, but the problem is how many people know about it, right? So, for example, there is a Hong Kong dollar CBDC is in the sandbox on conflux being prepared as well, but how many people know about it? So still, it's something that stays within the government itself. We know about it, we know that it's going to happen, but how people can still get into technology and understand what is the technology, right? And what are the cases for that?
I think it comes down to education, like my colleague said, very clearly.
Okay.
I mean, before this comes out, how many MBA programs are teaching you, when I mean MBA programs, I'm not picking out few specific ones, but on a mass market basis, how many of them are aligned with the regulatory and the technological change in a certain sector? And then bringing students up to speed with what's happening, both from a high school level, where you learn basic economics and commerce, right down to specialists. So I think there has to be education, like he truly said, about digital assets and the decentralized world that we are living in today, and the benefits and the pros and cons, both benefits and not so beneficial in certain ways as well. That education has to be mass adopted.
Yeah, I think it depends. There's a balance. I'm not sure how many people really actually understand the cloud, and they're all using it today to store and transfer data. I think a lot of that education and understanding is extremely important, because that's where you'll really begin to understand what are the benefits coming from the actual blockchain technology and decentralization to the extent that it is available. And also when we do have these government digital money, private digital money, what are the risks and benefits of both? How are those systems designed, and what are the implications for me as an individual in terms of how I can get shut off from a system? How will I be monitored with all of my financial transactions and everything else? But most people aren't even aware of how that is happening today. So that is really an integral part of understanding how these systems can be applied. But the central bankers were for sure one of the first groups. Ironically, we don't usually think of them as the most innovative, but obviously they were the ones facing potential disruption.
Yes.
And so we have seen a lot of interesting developments coming there.
Yeah, on the topic of CBDC, I thought it was always very telling what happened to Facebook when they tried to launch the Lira stablecoin. Basically, the central banks, I think, showed their hands at this point. It's we're not losing this. This is our toy. We're keeping control over the money, guys. So right now, I think, USDC, USDT, it's basically dollars on chain. That's fine, no problem. You're not touching at this. But I do think central banks, they have to be prepared to fight back just in case. So look at it, be ready to launch it if needed. Right now, there doesn't feel like there's a real rush. It does feel like it's inevitable, but I do wonder if the way this happens is by central banks issuing directly their own currencies on some kind of ledger, whatever, centralized, decentralized, or with the help of private companies, something a little slightly more distributed as a concept, closer to the banking rail of today. Something that's going to be super interesting to watch, but I don't think this is changing overnight. It's going to take a while.
I think that perhaps the CBDC could be one of the use cases. Forget the G7 countries. CBDC could be extraordinarily useful for countries that are, let's say, countries that are commodity rich. Their problem is nobody is able to understand or to see or to witness, is the value of my currency backed by what's in my soil or it's not? And let's imagine, and to the point, real-world assets that we talked a lot about, but it is a fact and it is something that will be absolutely massive in the coming years. So let's say you link those. You can actually tokenize what you have in your soil. You can then measure it. You can have it on a blockchain so big people can see and count and validate. that makes a link with your CBDC, because then suddenly you have, so I believe that, I hope, and I believe, that we will see CBDC actually having a massive improvement on the value and the stability for currencies in countries that today do not have that.
And to elaborate on that, it makes sense as a basket of different types of CBDCs of different countries. So that's why I personally really kind of respect the initiative of mBridge. You might heard about that. Then several countries, they join forces and they create their own CBDC and then create in that basket, because CBDC makes sense for the cross-border transactions. Because within the country, we feel safe by using just the local country currency, right? So that is, I believe, it's quite important. And going back to the main topic that we have, which is the future of digital assets, from investors' perspective, how do you foresee the future of digital assets, and what kind of trends you would love to highlight for the future?
I think this year, starting this year, the banks that have been fighting it, you're going to see a lot of mergers and acquisitions happen. A lot of those coins, a lot of those currencies that are coming under securitization, so Bitcoin obviously got the nod from the SEC, and you're going to see more kind of coins come under that purview. You're going to see a lot of mergers and acquisitions happening by these mainstream banks that will start acquiring a lot of these asset classes. And to my point, one of the biggest wave that I personally am seeing in this space is the maturity of tokenization, and how some of the traditional asset classes like gold, commodities, real estate are going to start coming onto, in the digital asset purview, and more traditional investors who've been conservative till now, because of whatever their reasons are, because of regulation will now start, that pool of money will now start entering the digital asset space, and it's going to start happening from this year, in my opinion, yeah.
Yeah, I think this is certainly an exciting year for understanding networks and the power of networks, and how these assets are linked to powering those networks. And I think that when Wall Street and others actually start to understand this new paradigm of the networks that operate these systems, and why these tokens and assets are fundamental to the operation of that, it will unlock a lot of potential for the space, and a lot of the interoperability and openness of other sectors as well. And then also this idea of digital property rights that's enabled through NFTs, and the capabilities in wallets, and seeing those be integrated into different applications, and what that means for individuals to actually have ownership in addition to interaction online, is just really starting to be understood across a number of different industries, from science with the decentralized science movement to, of course, gaming, art, and obviously financial services.
So this space started with Bitcoin, right, which was a reaction to the financial crisis that started in the US. And now I do think, ironically, one of the immediate use cases, it's easier to get access to the US dollar worldwide thanks to blockchain. So quite an ironic full circle there. But nevertheless, I do think as an application, I'm coming back to payments, because everybody needs to do payment every day in their life. It's such an important part of life. And this technology does make it easier. And practically speaking, I don't think people really want to have all their savings in a volatile asset. They feel more comfortable with a currency. It so happens that the US dollar is one of the most, if not the most liquid. So therefore, I do think payment, whether that's business to business, or settling invoices, or just doing commerce, is going to be still one of the most immediate application that has a real impact on Earth.
I think that for the trend of investment, and is what we will see, we have seen it now already starting, but it is similar to what happened in the past. I mean, one thing that we have to understand, we are seeing that, crypto has not invented anything in the sense of in trend of investment. It's always the same cycles. Before, people were looking at crypto or investing into crypto to have growth. I want to have growth. Strong growth, mid growth, low growth, doesn't matter. But I want to have this because I believe it's going to increase in value. What we are now seeing is people will move, a lot of this money will move into, I have crypto, I hold it, and therefore I want to have a yield, or I want to have something generated out of it. We are strong believers in DeFi that needs to be developed, but we are strong believer in this because that is where yield are coming from. We are heading towards, again, into a zero, real yield environment. Yield must come from assets that you hold. Crypto will not be different. Today, it's about Bitcoin and Ethereum. We can generate yield because we hold those assets. So what I believe is, venture funds have also matured a lot from the previous cycles. You have more experience, you have more dedications, you have better projects, better people in general. Let them do their venture job. The venture brings the project to the market. But then, when an asset is maturing or has matured, let's have it in a portfolio and manage it to generate yield. This will be the trend of investment that will make pension funds and institutional investors comfortable to hold assets. And that's going to be really the crack for the industry to grow.
No, thanks for the great summary. But to add on that, so I believe that the bigger we become, the more mature the industry becomes. So the more diversified it becomes. So, and talking about trends, now we do understand what kind of sectors we are looking into, and it might be absolutely different sectors, right? Some investors are looking into intersection between AI and Web3, so decentralized science, DeFi, so some payment like chain abstraction, ZK technology, L1, L2. So even investors, we are we are becoming so much diversified, looking into different sectors, but it's all kind of trends. Everything is great, there is the future of multiple direction, and there is a big future of digital assets in general. So we are wrapping up the panel. We have a few minutes left. Thanks a lot for our panelists. We can do maybe a small Q&A sessions if anyone have any questions. Otherwise, thanks a lot for opening up the second day of World Blockchain Summit. Thanks our speakers. We have one question.
Oh, nice.
I'm here. Okay, thank you. I'm Ron Yarn, founder of Bricks Exchange. I'm listening to you guys. I love what you're saying. My main question is, mostly I guess directed towards you, Amit. From the social impact perspective, how do you see venture capitalists connecting with founders like myself who need access to capital to create these visions of the future?
Look, impact is a big area. I didn't get to speak much about that, but obviously going forward, ESG and sustainability are going to be areas that a lot of venture capitalists are looking at. Now, the biggest barrier or the biggest problem with that area is the longevity and the life cycle of return on investment. Typically, if you look at a fund, which most of us run, which is a 10-year life cycle and a 5-year closed-ended structure, the emphasis on divestiture is quite high. And with most impact projects, it's literally impossible to overlay a fintech thesis on an impact project because impact takes time, whether it's renewable energy, it's sustainable mobility, whether it's food security or any one of the 17 SDGs. So I feel that blockchain and AI is going to have a pivotal role. A lot of investors like myself are looking at AI and blockchain solutions and decentralized solutions to solve a lot of those use cases in sustainability, that how do you get quantum computing or artificial intelligence once AI becomes decentralized, which is still a barrier, and blockchain would help that happen, come into the impact space. But there's definitely a lot of appetite in that space, yeah.
Okay, so we are running out of time. Thanks again for our panelists. Thanks for everyone attending. So earlier, thanks World Blockchain Summit for having us here. Thank you.
Thank you.